Dear AMC stock fans, mark your calendars for September 3rd because AMC is taking part in National Cinema Day and they are offering $3 tickets to go see any movie, as well as some special discounts on food and beverages. Well, today is September 3rd. What is the importance of this catalyst, especially in regards to AMC stock? Because not always good business turns into a good stock, but in this case, it might be different. So we're going to talk about that. We're going to briefly talk about what to expect for this upcoming week, what's going on with the federal funds rate monitor tool, where the markets are projecting the federal funds rate to be at that September 21st meeting that is just about 3 weeks away. Talk about the Ortex data, the Stocko tracker data, and everything else you guys need to know. So let's get straight into it. And I already read the title of this article, but in the key points, it says AMC Entertainment stock could see a major catalyst over the weekend. The theater chain is offering $3 ticketers on September 3rd for the National Cinema Day. This has it attempting to bring back moviegoers with the discount. And what this will do, in my personal opinion, is take someone that doesn't go to the theater often and get them in the theaters. What that does is, I know for me personally, it was like 2 or 3 years before I had seen a movie pre-COVID, right? And then when you go see a movie, it's like, why do I not do this more often? It was actually a good experience. It was fun, right? First time going to a theater in a long time. You want to go back. You want to go see another movie. Go get a drink or whatever if you're over the age of 21, right? Well, that's inevitably what tends to happen. And you go see another movie, right? It's this snowball effect, which is obviously good for AMC. So it's not a $3 movie ticket that's going to make a fundamental difference to AMC. What I want to see, and I think what investors want to see, is how big of a reach does this have? Do, millions and millions of people go to theaters? Is this going to be something big, right? And then is that going to lead to people continuing to go back to theaters? And I think that's what the big question is. And I think when you boil it down, that's the big catalyst. Can they get a lot of people to go to theaters, especially in America, especially where people are spending more money on food and beverages? And obviously not today because they're going to be pretty damn cheap, but just normally speaking, right? The average family that goes to theaters spends $50-$60 on tickets and their, candy, popcorn, drinks, so on and so forth. So I think that could be good, and it could show that there is a lot of demand still for people to go to the movie theater. And I think that could have a big impact as to how we are trading coming on Tuesday. So there is that in a nutshell. That's what you guys need to know about AMC's big catalyst. Now, in regards to what actually happened on Friday, we actually got relatively decent data that came out, right? The jobs report that came out wasn't good. It wasn't bad. Payrolls rose 315,000 in August as companies keep hiring. Non-farm payrolls rose 315,000 jobs in August, just below the Dow Jones estimate for 318,000. So if you guys are unaware, we want the payroll number, we want the new jobs created to come down. That will put pressure on, the employees that are looking for jobs. If you're an employee right now, you can go to 5 or 10 or however many jobs you want and pick and choose what you want, what's going to give you the best scheduling, what's going to pay you the most. And when there's such a demand to fill positions for companies, they have to pay more money. And what does that lead to? More inflation, people making more. Ultimately, the businesses that are hiring those people that are making more, they're going to have to pass those costs on to the end consumer. And that's the big problem, and that's why the markets pay very close attention to payrolls. The unemployment rate climbed to 3.7%, 0.2 of a percentage point higher than expectations. Now, forget the jobs report for a second. What actually happened on Friday, what caused the markets to fall, is Fed Master. She said that she sees over 4% federal funds rate by the end of this year and 0 rate cuts in 2023. The bond market has been pricing in rate cuts by at least the second half of 2023, and we haven't even thought about a 4% federal funds rate. After all, the federal funds rate right now is 2.5%. That means we're going to have to go up 1.5% at minimum by the end of the year. That would be 2 75 basis point rate hikes, because let's double check. Actually, no, excuse me. We have September 21st, November 2nd, and December 14th. So that's at least 3 75 basis point rate hikes, or 1 75 basis point rate hike, 1 50 basis point rate hike, and then 1 25 basis point rate hike to end the year at a 4% federal funds rate. As you can see right here, the federal funds rate in America is 2.50% as of right now. So it really solidified no Fed U-turn in 2023. Well, what does that do? It means a lot of companies that have to raise capital to remain in business in one form or the other, well, they're probably not going to be in such a good position by the end of 2023, right? You're going to see the effects of Fed tightening, of the balance sheet reduction, of all of this. And if they still are unwilling to cut rates because inflation is so high, well, that could put a big burden on economic activity later in 2023. And that's really what caused this snowball-like effect, kind of almost halfway through the trading day on Friday, going from 401.53, the high of the S&P on Friday, up over 1% on the day, mind you, and then to end the day down 1.05%, all the way down to 390.33 by the end of the day. That was an $11, almost $12 round move from the bottom to the top. A massive move, all because of the Fed and what the markets are projecting out. And as far as that September Fed meeting, 57% chance of a 75 basis point rate hike. I think markets are starting to lean more towards 50-50-50 rather than 75-50-25, right? They're not really expecting that 25 basis point rate hike to come back anytime soon. It's probably 50-50-50. So there's all of that. That's what happened on Friday, if you guys are wondering. As far as this upcoming week, for Tuesday, you do have ISM non-manufacturing PMI for August. That's expected to come in at about 55.5, which would be a little bit higher than the last reading that we did get. And that's pretty much it for Tuesday. For Wednesday, let's see. You do have balance of trade for July. That will be important. It'll play a role into the GDP print that we will ultimately get, over the next couple of months, but I don't think it'll be a big market moving catalyst. Now at 12:30 p.m. you have Fed Brainerd that speaks, Fed Barr that speaks at 2, and the Fed Beige Book at 2 as well. Now what the Fed Beige Book is basically like a summary of what's going on, like economic activity, how consumers are feeling in different districts, because keep in mind, there's a Chicago Fed, a New York Fed, a San Francisco Fed, a San Diego Fed, there's a lot of different branches of the Fed. There's a Georgia Fed, so on and so forth. So you'll get a summary of how things are doing in those individual regions. So that's going to be very, very important on Wednesday. And then on Thursday, you also have Fed Powell that speaks. And you can see that right here at 9:10 a.m. in the morning. And that's going to be a major catalyst. I mean, anytime Fed Powell speaks, that is going to be very, very big. That's pretty much it for Thursday. On Friday, you really don't have anything. You have wholesale inventories month over month for July. That is at 10 o'clock in the morning. And then you have at 12 p.m. you have Fed Waller that speaks as well. So really the big catalyst, if you were to boil anything down, is going to be Thursday, and that is going to be Fed Powell and what he has to say. Now in regards to AMC, The short interest value estimate in dollars is $956.63 million. Estimated short interest of free float, 21.64%. The free float out on loan, 38.29%. Shares out on loan, 197 million. Days to cover at 4.27, 100% share utilization. Now, it gets interesting when you look at the cost to borrow max sitting at 38.79%, still severely elevated. Cost to borrow average at 25.82%, and then the cost to borrow minimum only at 0.35%. So when you look at these numbers, they're very, very high. They're not as high as we've seen that 350% print, the 200% that we've seen, over the course of the last couple months, but still very, very high. And as far as the option activity, 12 orders totaling $243.56 thousand on Friday, 55% positive order value. So, it's over 50%, which is good, but not a lot of dollars actually flowing into AMC options as of right now. And if we take a look at some of the technicals here, guys, we're finding a lot of support to the downside around that $8.50 level. Once you get down there, even $8.30 right here, you hit a bottom, you came up, you ended up closing at $8.58 per share. Same thing down here, hit a low of almost, $8.32 per share. You ended up closing at $8.88 on Friday. So it looks like you're hitting a support level at about $8.50 per share, and it looks like, from everything I can tell, you're probably going to see a bounce either this week or sometime in the near future. We're due for a decent size retracement, a 10, 20, 30, 40, 50% retracement to the upside from here would still only put us, a 100% move would put us at $16 per share. That's at the higher end range of where we were just at, but it's still not up that much. So I think you're just way oversold and definitely due for a bounce. The RSI at 36.43 is really on the oversold side, and it's been down here for a very long time. And you also see the MACD, which is right here, the blue and yellow line. When the yellow line is under the blue line, that indicates bearish sentiment, bearish activity, bearish volume. Well, you are so past bearish right now, it's ridiculous. Like, you're down in the depths of the MACD, which typically this does not happen. If you look back at AMC's history, typically does not happen, besides when we sold off after the June rally in 2021. So that's pretty much it in a nutshell. What happened on Friday, what's going on with AMC, how this catalyst could be so important. So we want to pay attention to any headlines that coming on Monday or on Tuesday. Those are going to be important. And really, long story short, it's not about the number of or the dollar amount of what was sold, how much revenue these theaters made, but really how many people went out to theaters, because some degree of those, a good percentage, maybe 25%, 35, 50% of people will ultimately go back to see another movie over the next 3 to 6 months, and that's what could change the trajectory and make people a little bit more optimistic about AMC stock from here. So that is going to be it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Make sure to get yourself those free stocks with Webull, Moomoo, and Public, also linked in the description of this video. And if you guys want to come trade with me live in real time, also linked down below in the description of this video. You guys enjoy the rest of your weekends, and I will see you in the next one.